Goldie's closest friend, a longtime banker, unveiled one of the biggest deceptions perpetuated by banks: the seductive lie that your money grows effortlessly within the confines of your bank account. In today's unpredictable world, simply stashing your cash in the bank is no longer a safe bet. Inflation eats away at your savings, leaving you with less purchasing power over time. In the United States, for example, the U.S. Bureau of Labor Statistics provides data on consumer price inflation using the Consumer Price Index, or CPI, as a measure. According to historical CPI data from 1921 to 2021, the cumulative inflation rate over the past 100 years has been substantial. The CPI in the United States has increased by around 2,800% over the 100-year period from 1923 to 2023. This means that what cost $1 in 1921 would cost approximately $28 in 2023 due to inflation. So don't let your wealth crumble away. Subscribe now and embark on a journey towards securing a safer financial future. Hit that subscribe button and ring the notification bell to stay updated on Goldie's financial journey. Have you ever heard the saying, "Your money should work for you"? Well, it's not just a catchy phrase. It's a financial principle that could change the way Goldie thinks about her savings. While the traditional piggy bank might feel secure, the reality is that keeping cash in the bank is hindering her financial growth more than she realizes. Robert Kiyosaki, the acclaimed author of Rich Dad, Poor Dad, has shared his wisdom on the importance of unshackling yourself from banks. In his opinion, the key to achieving this goal lies in making your money work for you, rather than simply earning a salary and hoping for the best. Kiyosaki advocates for investing and growing your wealth over time. By doing so, you can increase your purchasing power and have more control over your financial future. It's a smart and confident approach to money management, and one that can truly change the game for those who take it to heart. Number 6 on our list, God's money: gold, silver, and platinum. Money is a fascinating concept that has been around for centuries. It is often considered valuable due to its purchasing power, which allows individuals to obtain goods and services that they need or desire. However, the value of money goes beyond its purchasing power. In times of uncertainty, money can protect individuals and their families. That's why many people consider precious metals, gold, silver, and platinum, as God's money. Unlike paper currency, precious metals have been known to hold their value during times of financial turmoil. As a solution to fiscal deficits, many governments continuously print more money. While it may seem like an easy fix to their current problems, these actions can have serious consequences on a country's economy. The influx of money can rapidly generate inflation, decreasing its value and creating a vicious cycle. Governments must balance their spending and prioritize allocating resources efficiently. As citizens, it's important to educate ourselves on the economic policies our governments implement and hold them accountable for their actions. By doing so, we can protect our earnings and our families. That's why Robert Kiyosaki swears by gold, silver, and platinum. They are safe havens that investors flock to when markets become volatile and governments continue to print money. As a result, owning these assets is much better than holding cash, and is a smart and confident investment strategy that can help secure one's financial future. Whether it's to protect against inflation or to diversify an investment portfolio, owning precious metals is a wise decision that many people trust. Shifting gears to number 5, value stocks and mutual funds. Investing in value stocks or mutual funds can be a smart move for those looking to grow their wealth. One reason for this is that unlike cash, which yields little or no return, these investments have the potential for higher gains over the long term. For instance, imagine investing $10,000 in a mutual fund with a 10% annual return. After 10 years, that initial amount could potentially grow to over $25,000, which is much higher than if the same amount had been kept in cash at a bank with a 0.05% annual yield. Goldie takes this to heart and starts analyzing NVIDIA, which is an excellent example of a value stock that has seen impressive growth in recent years. Despite being a highly competitive industry, NVIDIA has managed to stay ahead of the curve with its innovative products and intelligent business strategies. This company is dedicated to providing the technology the world needs as artificial intelligence and blockchain continue to blossom across Silicon Valley, China, Europe, and the rest of the world. NVIDIA is not only a value stock, but also a growth stock with solid fundamentals and financials to back it up. And Goldie believes NVIDIA is well positioned for even greater success in the coming years. She now understands that value stocks and mutual funds tend to be safer than investing in individual stocks because they provide diversification across many sectors. This reduces the risk of losing all their money if one company or industry performs poorly. Overall, investing in value stocks and mutual funds can give a sense of confidence, knowing that her money is working harder for her over time, rather than just sitting idle in cash. Let's jump into our fourth recommendation, land and real estate. Investing in land and real estate is one of the smartest choices Goldie can make. Unlike cash, which is subject to market fluctuations and can lose value over time due to inflation, land and real estate are non-depreciable assets. This means that they maintain their value over time and even appreciate in value. A piece of land or a building that may have been purchased years ago for a lower price than it's worth today can now be sold or rented out for a significant profit. In fact, some of the most successful investors over the course of history have made their fortunes by investing in real estate. Take, for example, a prime location in Manhattan that was purchased for $1 million 20 years ago and now sells for $3.5 million. That's a 250% increase in value in just 2 decades. With land and real estate, there are multiple avenues for generating revenue, such as leasing or renting out space, developing new income-producing properties, or flipping properties for a profit. Ultimately, Goldie quickly learns that investing in non-depreciable assets, such as land and real estate, is a smart decision that can yield significant returns over time. Coming in at number 3, industrial commodities. Investing in industrial commodities, such as metals, can be an excellent strategy for those seeking to maximize their returns. This is because commodities, unlike cash, offer unique advantages that make them a better choice for investors. For one, they are tangible and have inherent value, which means they will never lose their worth completely, even if market conditions change drastically. Additionally, they are often in high demand, making them a popular choice for traders looking to buy low and sell high. For example, copper, one of the most popular industrial commodities, has seen a steady rise in value over the last decade due to its many applications in construction and manufacturing. In fact, copper has increased by 35% from October 2020 to late 2023. Those who invested in copper during this time were able to realize significant gains, making it a smart investment choice. If Goldie is looking for a much better place to park her hard-earned cash, industrial commodities are a great investment for those who are looking to grow their wealth. Drum roll! At number 2 on our list is one you may not have even thought about: collectibles. When it comes to investing, many people automatically think of traditional options like cash or stocks. Collectibles are becoming an increasingly popular investment choice among those seeking to build wealth. Unlike cash, which loses value over time to inflation, collectibles such as cars and art tend to appreciate in value over time. As an example, limited edition cars have become particularly popular among collectors and investors, as their value often increases significantly over the years. A vintage Ferrari or a one-of-a-kind painting by a famous artist can provide both aesthetic and financial rewards. Additionally, take for instance the Ty Cobb baseball card from 1909. In 2016, one such card was sold for $3.12 million, while its original value was only a few cents. This demonstrates the potential for collectibles to generate a greater return on investment than cash. If you or Goldie want to start investing in collectibles, you can even do so by purchasing fractions of a collectible on Convy and Masterworks. Remember, investing in collectibles requires a good understanding of the market and an eye for quality, but for those willing to put in the time and effort, the rewards can be substantial. In a world where traditional investments, such as stocks and bonds, can be volatile, a savvy investment in unique collectibles can offer peace of mind and a greater sense of control over one's financial future. And number 1 on our list is, of course, and arguably the best option, as opposed to cash: Bitcoin. As Michael Saylor, an entrepreneur, co-founder of MicroStrategy, and a prominent figure in the world of finance, has made clear, Bitcoin is the best investment out there. Since its creation in 2008, the growth of Bitcoin has been nothing short of impressive. This decentralized digital currency has not only caught the attention of Goldie and of investors around the world, but has also impacted purchasing power in multiple industries. The rise of Bitcoin signals a new era of cashless transactions, where individuals and businesses alike can conduct fast and secure transfers without the need for intermediaries. The digital currency has proven time and time again to hold on to its value, making it a reliable store of purchasing power. Traditional currencies, on the other hand, have a tendency to lose value over time due to inflation. By investing in Bitcoin, you can ensure that your finances remain stable and secure for the long haul. Bitcoin is often hailed as a revolutionary currency, but one of its most notable characteristics is its finite supply. Only 21 million bitcoins will ever exist, which makes it an incredibly rare commodity in the financial world. This is due to a deliberate mechanism built into the currency's framework, which ensures that new bitcoins are only released into circulation at a decreasing rate over time, with the final release expected to occur in the year 2140. This rarity ultimately drives up demand and value as investors seek to acquire a piece of the limited supply. And unlike cash, which can be easily lost or stolen, Bitcoin is stored digitally, making it virtually impossible to misplace. With the ever-growing popularity of cryptocurrency and the advancements in technology surrounding it, there's never been a better time to invest in Bitcoin. As Bitcoin gains more traction, traditional methods of payment may become a thing of the past. Although Bitcoin has certainly had its ups and downs, its growth continues to prove its relevance in the world of finance. As this digital asset continues to steadily gain value over time, it's clear that Bitcoin has revolutionized the way we perceive the concept of cash. Exploring these 6 assets that go beyond the realm of cash has been truly life-changing for Goldie. From the traditional to the innovative, we've shared alternatives that can elevate her financial prowess and allow other investors to jump into some or all of these opportunities. But hold on, the excitement doesn't stop there. If you're eager for more expert insights on maximizing your wealth and optimizing your financial strategies, remember to hit that subscribe button and activate the notification bell. Our upcoming video will take a deep dive into the top 7 ways rich people make money with debt.